Good afternoon, everybody. Hope you're doing well. I just recorded the call about 12 minutes of the call and realized I was hard muted the entire time. So just so you know, I did a really good review of Google and Apple. It was very in-depth and insightful and amazing, and it will never be known to the world. So anyway, just joking around, but that's a little frustrating. Let's get into the recap for the session. See if we can go through these things again for me and first time for you. Starting off with a couple playbook trades. So Google, Apple, really nice today. We had playbook setups, really good to see. I've mentioned pretty much all day yesterday, just stay patient. Outside of scalps or sizing down, if that's your thing, just stay patient. There will be opportunities that emerge. Our prep from the week has really played out so far, and that was mainly just expecting a bit of a more volatile, choppy environment. With this gap down, often that's what you'll get. So we're kind of trying to carve a range out. Overall, it's been very bullish and constructive from that, overall, but it's not without, the range expanding a little bit. So we're seeing that play out pretty well, but we did get some nice hands dealt today, so that was exciting. Some nice trades. Yesterday was a good day of staying patient. I didn't take any trades yesterday. I thought Baba was good, and then there were some scalps on S&P, but that's not too much my thing. I try to stay focused on the bigger picture trades for that. Personally, it's just preference. So yeah, anyway, let's dive into the trades today. So a couple to review. Google is very good. It's not every day that you see Google have 10 times RVOL in the pre-market. That is rare. This is a 6% gap up, which you also don't normally see on Google. I talked to Sarang about this earlier through some messages, and he had mentioned that a lot of times these gaps on Google with the structure that we have, we'll see fades. And the takeaway, highlight from our discussion was that the reason this time was different is because of the context. So, we're gapping up over all-time highs. We're out of this range. So a lot of these, as you can see, these dips, a lot of them were associated with catalysts, and many times it was just because we kept getting kind of stuck trying at resistance and getting stuck back into the overall trend. So, big picture, big recovery on Google. Then we got obviously the large gap through, with investors feeling better about with the catalyst and clearing kind of that overhang that's been sort of a cloud of sorts for Google that is now out of the way, cleared up. So big reaction. You don't see that every day. Good RVOL, so on and so forth. So the trade today was an opening drive trade. The reason for that was the pre-market structure had a bit of a wedge flag set up here. It's more of like a wedge anyway. Regardless, it is defined pre-market structure, and I was actually not really looking to trade the open because we had seen this structure break up into the open. So if we would have made an immediate move just super fast higher, it would have been a trade I would have likely missed. As you heard me talk about in the pre-market, I was not super amped up on the opening drive place necessarily today. My conviction wasn't quite as high, but that changed once we got into the open. So, and that's where you have to be reflexive to price, depending on how it shapes up. So we got a nice setup, and what I reacted to this morning was this back test of the pre-market structure. So we broke this trend from the pre-market structure, trended higher, and then it was this turn lower that back tested this spot. And my entry was a little bit actually, I think it was a little higher than this, was up in here, and it was underwater initially. But the point of what I want to talk about is the reason I reacted so quickly to this is we will see on the open a lot of times a quick back test that gets bought up fast, and when it starts to create an aggressive wick, often can be some of the best opening drive trades. If you look at Mongo, there's kind of a similar thing there. That was a little bit more nuanced, but there are plenty of examples of, for some reason, targets coming to mind from like last year, where you saw this like very quick check back to some kind of structure in the pre-market that just gets bought up super aggressively. So I was a little early, but it ended up, working out really well. And this was a trade that, for opening drives, I do want to call out, I was fully prepared to take my stop if we broke these lows. And the reason for that is because the expectation of an opening drive, we talked about this on stream a little bit today, if you missed it. Basically just how you create sell rules is based on the expectation of the trade. So if you're struggling to find like the right sell rules, it should be based on the expectation of the trade. And not every trade's the same. Some trades are trend trades, some trades are momentum, some are just quick scalps. So the way that you manage the position should be a reflection of what you expect to happen in the trade. And so for opening drive trades, the expectation is a fast momentum move. So if you don't get that, you want to get out, right? And it doesn't matter if it, sells all the way down here and then comes all the way back up, or consolidates and then comes back up and it's like, oh, it worked anyway. No, that's not the right way to think about it, because you have to segment it into what it is. This is an opening drive trade. It either works and you get that momentum, or it doesn't. And that will help keep your mind sharp and be ready for the next trade, because that trade that I was just talking about would be more of like a give and go. And then you can take that. And by taking the time to define all your trades in that way, it just helps, your mind stay organized. And it also protects you from a risk perspective as well. All right. So if you get caught, in something like this and you're just like hopeful that it comes back, that's just such a, every trader's been there in that mindset, and it's not fun. Right. So anyways, I digress. This was a nice little trap almost of this pre-market structure, but mainly just a back test of the trend. And then a quick reaction higher, main target being the pre-market highs, which we got to, popped above. So took some profits into that. And then the secondary entry, I got to flip to the regular session hours here. So the reason for this was I was watching the EMAs, which I like to do on day one trades. So with Catalyst, this is something that I'll pay attention to. We basically just pulled off of the spot, back tested the 921 on the 2, and got a reaction on the reaction. I added to that, or added the roll up and for shares. Yes, I shared my execution in the review channel, by the way, for shares, which I have definitely I have not done a good job of posting the reviews in the reviews channel. I've kind of slacked on that. I've been posting the reviews just for what it's worth every day in here. So I do track the playbook trades daily so we can reference them. But I just kind of slipped my mind, honestly, posting the execution that I do in the reviews channel. So I posted Google and Apple today. Just so you know, I'm doing the account challenge. I'm also trading a larger account, which I primarily like to focus. I do trade options, but I like to focus on shares because I have some keys set up. I'm getting way off course here, but the point is, it's fairly almost identical execution. That's what, because it helps me stay focused. I don't want to get trapped in two minds, but there are times where, because of the size, I'll have some runners or some more shares left for carry through or something like that. Whereas for the account challenge, you saw me add a roll up here. So the roll up is 232.50 call. Those are up about 70% actually. Close up 67%. Very nice opportunity. A lot of so getting back to the reason for this entry, the best trades on day one, the first pullback is usually what will establish the trend for the day. So if you're learning or wanting to take notes, that's something that I've observed for several years. The first pullback, the first real pullback on a day one trade that is very strong, the best ones, it'll be what establishes the trend for the day. And as you can see, that was really the case for today. You can use the 2 or the 5 EMAs for this. Later in the session, I'll usually switch to a higher time frame, like 5. That made no sense. Once you get later in the session, I'll usually switch to 5, and oftentimes you'll see me talk about the 10-minute EMAs. The 234.50 in particular, the first back test of that on day one, I usually pay attention to that for whatever reason. It usually gets really good reaction, which you can see here. This was the first back test of that, and you got to move up to the highs. So anyway, there's not necessarily a science to the EMAs and the way that I use them. I should do a video on that. It's not, like a perfect system. I don't claim for it to be a perfect system. I do things consistently though, and for reasons because I've seen them work, right? So Anyway, I digress. Google, really nice, good opportunity, trended all day. Then we got some news at the close, which led to this pop. So oftentimes when you get a strong catalyst, remember MDB, right? The best catalyst will typically increase the odds significantly that the stock will trend on the day. And having that and close on the highs or near the highs, and having that framework to go off of when you have a strong catalyst can be really helpful for not only the trade that you're in or holding runners, but looking for other trades, right? Like if you're wanting to be very active, you could trade this multiple times, right? Like you could add on this back test. Sarang even kind of puts on this kind of look above the pre-market highs and trap and turn. So like you can, if you have a framework to go off of, it does help to catch more than one opportunity. So I try to keep things pretty simple, not over trade, but everyone's different. So let's see that. So the one last thing I was going to mention on Google is that, you know, if the market was in a little bit of a different place, I was very close to grading this A today. The only reason I didn't was there was a little hesitation with the market where it was. And anytime there's a little bit of hesitation, my thought would be to be on the more conservative side than aggressive. So that I would, you know, in hindsight or, you know, in review, I would grade this like B plus, A minus, just for what it's worth. All right, Apple, give and go, nice give and go today, really straightforward. This is exactly what you would expect. We had a gap up. Pre-market structure was a double top. So this is a setup you could fade into the open, targeting support. I was lasered in on Google, and it's not my first inclination to take a fade on a strong catalyst. So I'm fine missing that, but it did set up the give and go. There was a lot of confluence. 235 is a key level. It's also ATR. So there's multiple things saying that 235, 234 would be important. So once we got a reaction to that and the market was holding at the time, I went long on this turn. In review, I would say that this is a better entry or an entry that I should have gotten more size. So, you know, my entry was defined. It was, you know, a little bit aggressive, I would say, on this first move. And the reason for that is sometimes you'll get these give and goes that are really violent back to the highs, like without wasting any time. Those ones, more momentum plays, the more, I would say, traditional or textbook give and go are actually more trenders. They'll just kind of have trend variables. You hold them all day. The best ones will close up near the highs or through the highs and trend up and trend above it. So the way I'm thinking of this is like, okay, the setup is what it is. If it's a good one, it'll close near the highs. It's honestly that simple. How I get to that point of making it that simple isn't as simple, but that is really all that it is. So, but what I want to call out is this consolidation following. So if you don't get that aggressive move back to the highs, often you'll see consolidation set up first and then a break. And that's what you got here. So you got consolidation and then boom, you pop through. It's also worth noting that my entry was before data. So that is important. I was a bit front running that data. So if you imagine if we got a big reaction positive, on the data, we likely, maybe you don't get as much of a chance or it's not as clear. So it's a little bit of a balance, but this entry would have been a spot after the data to, if you missed it, get involved or look to increase size. And then you just hold for the trend. And then we ended up closing near the highs. Our main target was this opening print high because that's what you're normally going to be targeting for give and go, which we tested twice, very clean. I took some profits along the way today and then into the close. We ended up getting that news, which led to a pop higher. So spending a little bit of time on the review section today, I think for good reason. These are playbook trades, the very textbook playbook trades, and it's not every day that you see them happen on a Google or an Amazon or an Apple without earnings, right? So, that's something I think deserves some attention. I was honestly, it was like in the mindset of not like being prepared to not even trade this week. I knew that likely would not happen, but that was my mindset. You saw me, avoid any trades yesterday, and then really just stress all day. Just wait. There will be opportunity. Market could be pretty volatile this week, and then we get an Apple Google catalyst, right? So that's the nature of the game, and I feel like we executed it pretty well. So. That is our review. I will quickly mention so we can move on a little bit faster. Reddit, not my first, not a setup that I have a ton of reps in, but this is how you get better at identifying these in real time. This is a big rejection trade. So I had a nice open through 230, but the big thing here is the daily. So look at this 238, very defined key level here. You had a very fast move on the open. This ended up being a big rejection. So if you're prepared for it, this would be the most aggressive entry on the turn. Under, it would be more like right here, at least under the prior bar. Back through 230, secondary entry. And then if you're not convinced by that point, this a little bit of a bouncy ball and turn lower would be the third entry with different expected value, different expectations for each of those entries. So again, I don't trade a lot of these setups, but I do think it's valid. The RVOL is elevated. The RSI got very bearish, very defined key level. Lots of things to point to, very defined and repeatable. We're seeing a lot of these fades set up, and we're starting to track them more in the database, so that way we can get better at them. There's another one here, Octa. Okay, let's get into the market. Sorry for belaboring that. I'd had to do it twice, so I'm like on 40 minutes of the review right now for the session. So S&P, we're reclaiming the trend from the daily. So far it's been what we've seen all year, regardless of September or August or what anybody has to say, including myself, about seasonality and this, that, and the other. Every dip has been bought this year. So since April. So once the capital requirements were changed for banks, it's been just different. That has just been the case since the April tariff lows. And also we have obviously the Fed talking about more rate cuts, and every major dip gets swallowed up. So that's where we're at. I think what you just have to be careful with here is chop. So we have a super heavy data week. The economic calendar this week is very, very jam-packed, full every day. And tomorrow we've got the employment change, jobless claims, PMI data, global services PMI, and non-manufacturing PMI. And then Friday is a big one. We got the non-farm and unemployment rate. So really our thesis this week is just kind of the same. Expect volatility within the range. It doesn't mean that we can't just push and keep going higher. But when there is a catalyst, you'll see these moves like this end of day move, right? Where we kind of fade the gap and then it's like risk off into the close. Like if, we couldn't even get to 6,400. So sellers kind of lost some control, and then we just pushed right back up to that, the position at 6,450. So the condor is back for tomorrow. So we've got a 64, I think it's 80. Let me pull it up. Yeah, 6410, 6480 is reference points. All right, so 6480 is significant because that was a previous all-time high. So that might be what we are contained to tomorrow. Won't surprise me if we gap up. Obviously, there's a lot of data, but with how the market's been acting and the way that we just closed today, would not surprise me if we gap up. Just keep in mind that any kind of gap up, look at all this to the left, right? This can be tough. So really the theme is just one trade at a time, guys. There's no reason to be bearish yet. Until we lose bigger levels and stay below them for more than literally an hour or two, you just can't be bearish in this environment, at least in my opinion. As a trader, you have to continue to just trade what's been working, and that's failed breakdowns, recoveries, bounce trades, end of day trades, stuff like that. It's just until it works, or until it stops working, we have to just continue to align with that. All right. I am going to move on here to watch list for tomorrow. I actually do need to update my active position on Google. Let me do that real quick here. So what, 9.5, 232.50 calls. We got filled at like what, 106, I think. Roll up. Let me just double check that. So I'm holding Google overnight. Just a roll up. It's already up 70%. So we'll see if it can gap up tomorrow. Yeah, 106. I'm holding Tesla. Tesla was, it's like a love-hate relationship with the stock. It's still in this wedge, so if you extend this out, rejected perfectly at that spot today. It made a nice move and then had an ugly close. So I don't really know what to say with this other than I'm being patient. I've got till October 17th. Doesn't mean that I'll hold just because I have time. But we got a reaction. I said I would give it a chance, and I am, and it is, testing my patience. But we'll see. We have 2 days left of this week with a lot of data coming. So if it responds positively, we get back over this spot. I do think if this unwinds to the upside, it is going to be an awesome trade. So maybe because it's so anticipated, it's having a little bit of trouble in the near term. We'll see how that develops. Still holding UNH. I actually like where UNH is at going into tomorrow as well. It's just stuck in this range right now. It does look, fairly boring, but it's what it's not doing that's important. It's not selling under 300. It's defended 300 super well, and it's been contained under 310 a lot. So let's see if this can get going through 310. I think if it does, it'll kickstart a move up to 320s at least. Still holding some BABA. Haven't done anything with that swing, just holding it. May add to it. We'll see. I would like to see a move over 139 this week. It'll give me a little bit more confidence. I find this incredibly difficult to trade, to be honest, but so far it's working. And we'll just let it do its thing. All right. Back to, or not back to anything. Next, we have Watchlist. So tomorrow, I'm going to rifle through this. Where are we at? 20 minutes. We usually stick to about 20 minutes. So let me rifle through these. All right, Google. Google day 2 setup here over 231.31. Very likely we gap, but anyways, we'll see where it's at tomorrow. The straightforward trade is over the prior day high. Apple, same thing, over prior day high. Got some levels from earlier still on here. Clean that up. We've got a level of 241.37 on Apple to keep on watch. So I would expect that to be more or less a magnet. UNH, we talked about PLTR. It's still just kind of like trapping around this flag. Back underneath it actually now. So, under 153, not bad for puts. Under 151, even better. For the upside, I would just wait for 162.40 at this point. With the way that it reacted today, just wait for 162.40. I'm actually just going to set an alert there. If it breaks to the upside, that could be really good. This is actually a pretty key level here. This 161.33. So watch this zone to break for upside. BABA, we talked about, watch 139. So we had an inside day today on BABA, just catching its breath a little bit. Watch 139 for continuation. Strong names stay strong, so stick with the leaders. MDB, 322. So now that this has spent 3 days consolidating, it's defended well on dips. We'll see if we can get that continuation move up to 333. RKLB, nice rejection, actually pretty painful day for longs. This was absolutely got smoked, honestly. Like I wouldn't have expected that. I know Space Monkey was watching this through 50, so was I. It was a very promising setup over 50 after spending a lot of time backtesting and holding the flag breakout. So this is a good example of one that you wouldn't really expect this. And that's probably why it reacted the way that it did, right? Once it got selling, it was just kind of like, snowball effect. So that being said, going into tomorrow, this is a pretty textbook continuation trade. You've got a almost 12% sell-off that closed on the low, literally closed on the low print, which is a very high likelihood of getting continuation. The only thing I will say with this, with no unless I miss something, which is possible, so correct me if I'm wrong, unless there's like a major catalyst, this might just have become a bit of a slippery slope today, and seller or buyers just could not, hold on or gain any kind of defense. So sometimes when that's the case, it's not, due to anything really fundamentally changing. You'll get inside days the next day or a bit of a bounce, relief bounce or something. But if that's not the case, and you quickly break this prior day low, that would be a pretty textbook setup. So that's that. Alta, a little bit of a look above and fail at this 539. Just wanted to watch. I probably won't trade this, but shares, not a bad look. And then I really do like Netflix, and Netflix looks really coiled into the end of the week with the data coming. This could be better as a lotto, honestly. It's like one of those setups that is hard to time from a trigger perspective, but I think that the idea could play out well. And so the reason I say lotto is because you can just size a smaller amount to zero, but if the idea plays out, I think that this can push through 1250 actually. So excuse me, it won't surprise me if we see a move up to like this 1260. This is that prior high here. 1263, 1280 into next week, something like that. So I think this is a really good candidate for a lotto into the end of the week with this big trap at 1192. All right, guys, that's it for today's call. If you have any questions, as always, let me know. Otherwise, I will see you tomorrow in the morning. Have a good night.